Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Wednesday, November the 16th, 2022. So the market remains what I would call a little bit unsteady. So it kind of was a day where we kind of had to pair things off and how many buyers, how many sellers, what were they going to buy and what were they going to sell on? And there was no greater pressure from either side. So I'm going to basically relate it that much of today's trade, in my opinion, was surrounding the options within all of these component stocks that have options listed on them. And particularly in the NASDAQ, being the tech sector and being the high flying tech sector and being a strong tech sector, going through a transitional period right now of adjusting to inflation and adjusting to how business is transacting now and what the costs are, et cetera, et cetera. So there's been a little push and a tug and a pull with third quarter earnings because of the belief of what we're receiving from outside sources and dealing with. Are we at the middle of the inflationary period? And are we going to go into a recession? How bad of a recession? Is the Fed going to pivot? Etc. Are we going to have a year-end rally? I mean, there is just so much swirl that it's truly just noise coming out right now. And a lot of it is courtesy of the financial media because it's what they want to say and what story they want to actually put out as headline major. And so they're not necessarily going to be talking about something negative, because right now the spin has got to be, we're going into the holidays, you got to be cheery, you got to have something good, you got to blah blah. Okay, enough said. Going on, Nvidia reported. Nvidia on the close, the New York close, was down, closed down $7.56. So closed at 159.10. Traded down, I think, to like 156, 153 once the earnings were announced. They were in line with what the company had really led to us to believe several months back. So, but NVIDIA is pretty solid as a company right now. And their product still sells and they still make a fair amount of money, a pretty good fair amount of money. So I would think that the company is healthy. I think that the company survives all of this and lives to go another quarter, 2, 3 for the year. So with that in mind, the stock has been lifted up a little bit, now trading at 160, 162-ish. And so what I'm looking at here in the NASDAQ, because that's where we're going to begin tonight, we continue to see a pretty strong interest in Apple. We saw that Google actually closed up today. So there's a lot of just positioning, position squaring. We have an expiration on Friday. We have end of year. So the negative and the downside, it's going to happen because the reality that surrounds it has not occurred yet, and the reality that surrounds it has not improved. You get a little nick here, a little nick there, but it has nothing to do with how people are trading. So I continue to follow the Elliott, and right now you're going to see, as you can already see, that I am putting at yesterday's high. That's where I'm going to put this minute 3. And here is why. If you remember, while I had it here and called this a 4, an irregular 4, and a 5, or just a regular 4, and then the 5, that's still not, I don't think. And then I had put the C and the 2. That's what I did yesterday on that high. Got up to the 50% retrace level, and I'm thinking, okay, that's pretty good. And then it started to come off. In fact, it was rejected very cleanly, came back down, swung below, at least via the S&P, this low, and the NASDAQ, it did not. So a little bit of conflict on the details of the count, but I had alluded that I may just move this 3 up here because what I look for, and particularly at this is not just like a 4, a corrective 4, and we're dropping into a 5th wave, which shouldn't have the impact of what a 3rd wave should have. So what's important is to realize that what comes next here is an intermediate third wave decline. It's not that we're going to drop in a fifth wave decline. It is the third wave, normally the longest and the strongest and carrying the most power. So I would expect if that is the finishing point of intermediate wave 2, that it would kick off similar to this, but it can't do this and it can't do this waffling around and just kind of do it. Goes high level support or resistance, breaks. We get below the rising. We get below, first of all, the moving averages, which we now have successfully done on the hourly, except the 200s, as you can see. But we've dropped below the 50s today, closed below the 50s today. We'll see what they're going to want to do. But I would believe that as I've got this labeled, they're going to push it back up. And if this goes the way I believe it's going, and I put the 3 here and the 4 here, then we've got that fifth wave coming. Now, again, I have to work with both. Just because the market didn't satisfy my need to see it really drop quickly to give me confirmation doesn't mean that they won't turn around and just kill it. We have seen that as well. So unfortunately, in the transition to go up and the transition for all this to finish, this went up with retail purpose. Now, I'm understanding as well that we did not see the institutional buying as what would be expected at a major low or a major turn in the market or the completion of a bear market moving back into a bull market, et cetera, et cetera. None of that has really been seen. So I continue to view this as an intermediate wave 2. But if I put that there, these have always remained in play. I've discussed them, they're still there. So again, from our current levels, yep, maybe we can get up to 12,780. And they're just going to continue to go on earnings, go on what's happening with the dollar, what's happening in bonds, what's happening here, et cetera, et cetera. You're going to see, look at bonds. Look at bonds, 126. Now, again, I know I didn't say it in these updates, and I apologize. So I am going to go very quickly over to the bond, the 30-year, so you can see 129. It's in correction. This is 3 waves, and here we are in the C, and the C is doing exactly what a C wave should do. So 129, next stop. It's gone past that. So it's just a pullback, similar to that, but on a lesser degree. So similar. We do these pullbacks. 3, here's a 3, here's the 3. We got more coming. That the count is telling us, but that doesn't mean we don't correct. It doesn't mean we don't bounce. And business transacts. Same deal. Look, A, B, here we got the C. That could be 3, 4, 5. We're getting close. And 113.280 is where that resistance comes in, or likely to complete this. Right? We had that. A little tiny inside, a little bit bigger inside. So it's degree. Larger degree, internal, like a 1, 2, possibly. Drop into 3. We'll see. These are the bonds. Okay, back over to the NASDAQ. So we have all of this stuff going on. So yes, the market can get to 120. I'm going to say 12,500. That's been out there. That's what people kind of look at. But we have full potential on the daily chart to go up and give a test at 12,737 to 12,780. That's resistance from the moving averages, the 200s, both the EMA and the SMA. And then we have the 70.5, which called the sweet spot, at 12,780. Sweet spot coming from old market makers from the S&P or the SPX pit. And that was a Fibonacci that they used and they would trade off of. So again, it's still there. It still works. So I include it. Now, but it is not something that I came up with. Let's say that. All right. So that's our top side. Again, reflecting what a wave 2 can't do is go up and take out this high, which is 13,741. Cannot take out that high. then it is not a wave two. But I'm not expecting it to. I am expecting that, yep, we can have this year-end rally. But I don't think we get all the way to Christmas. I think, we have Fed coming, and they're already starting the chatter. They're already starting the yak, yak, yak. Oh, we got this Fed governor making the stump and, all around saying, 50 basis points. And if that's just to kind of calm everybody's nerves so that we can go on, what it does is just pushes these markets more on speculation. What should the response be? Oh, they're going to pivot. We're going up. It's like, do we think we've gone high enough? That's going to be the question. All right, so we have that. Downside, again, if it is all done, it needs to kick in. And if we're coming off in 1, 2, 1, 2, well, okay, then it has to go. That would be acceptable. 1, 2, 1, 2, but it can't fool around up here. It needs to go. And it needs to drop. Then this goes back to the 3. This is the 4. That's the 5. 1, 2, 1, 2. All right. That I put it this way so you could visually see where it could go. I took the others off so that you could see where. But if it is, we're dropping. Same picture, folks. It goes, it breaks these. And this 1, 2, 1, 2 drops it into the 3 of 3. And that's the one that kicks butt. And again, people go like, well, what could do that now? Many, many things. And often, if it's going to move at the speed I think it should, it is a surprise. It is, oh, I was not expecting that type move. All right, I'm going to leave it there. That's what we're looking at. Going over to the S&P, it is actually the same story. S&P is making a little bit cleaner moves, but both S&P might be a slight failure, but it truly isn't if I go to that close basis, because again, see that tail. So in any case, on my hourly chart, I moved it around this yesterday. This was 2, 3, 4. Right, we did a little irregular 4, then put into 5, and that was then the end of intermediate wave 2. I moved the 3 up, same reason. But here it's a little bit cleaner, a little bit cleaner. If this is ABC, then it's a 4, and we're going to go. It's not coming off. The S&P is not coming off as strongly as the NASDAQ did or is after hours here. So if we're still now in that upside, because if you're looking at the hourly, you can see that the 200, not the 200, excuse me, the 50s are flat. Keeping all that right in line, right? So we're not moving too much anywhere because look at that. Candles are reflecting what the 50s are telling you. 20 sloping lower, 8 sloping, but you see it's kind of getting ready to crest and maybe turn. 4 is now gone flat because maybe it needs going to turn. We'll have to wait and see how this all wants to open tomorrow morning and also Globex. But if it's a 4, then I'm looking for that. And what's our next level up? 4,083.84, possibly as high as 4,100. 100% line is at 43.2750, and that is the previous high, and that it cannot break. Then it's not a wave 2. But it certainly can visit 4,100 if it wants to. But again, what we're going to start to see, it's not the power of the 3rd anymore. It would be the power of the 5th. And the 5ths are not as strong as the 3rd. So it may go up. Very similar to that PPI final. People really thought, oh, we'll get the same type of a reaction that we got off of the CPI, right? Wrong. It was much, much, much more muted. They did try, but it ended up producing the high of the day. And right now, the high of the sequence. So it should be weaker, and 4,083 to 4,100, in my humble opinion, should possibly contain it. Again, downside, if I have to back this back up again, oop, I did leave the 2. Sorry about that. I did clear it off the NASDAQ and left it on the S&P, and that should be there. No 2. 2's not happened yet under this, but you would see where it was. Now, breakdown from here would be it kicks in, period. It kicks in, turns, goes, black hole, basically. We're going back several days, but still, right here, we got nothing. It was all part of that rally. So on the way down, where are we going to stop? Probably the 200, probably 39.14, which was resistance, the 50% resistance on the way up, now should provide a little bit of support on the way back. Not going to hold, doesn't necessarily mean it's going to hold, but it provides a pause. Then we have the SMA at 38.90. Then we have additional fibs, but I'll be running new. If it gets down this far, once it starts to break the 200s here on the hourly, then it's like, I'm pretty much, you call it, because we're halfway through. And then different fibs. It would be fibs that marking that as the high, and for us going down now in a third wave. So yeah, if it's severe enough of what I'm looking for, that shouldn't be a problem. That shouldn't be a problem. Getting closer to 3,700 maybe gives you a little bit like, take a breath. But outside of that, no. I think we go pretty quickly. What's going to do it? Again, I'm going to repeat myself. Pick one. We have a lot. So to question an analyst to say, what's going to cause that? It's like, there are a lot of things that can cause that. Now, this is the guy, Fed's Waller, the Fed Governor Waller. He's outlining a case for slower interest rate hikes. So everybody's running that story now. Barron's has got it. Wall Street Journal's got it. CNBC's got it. Bloomberg News has got it. Boom, boom, boom. We could go. Now we definitely have a reason to get in. It's like, yeah, but that's already here. That was a part of this. Now you think we should do it again? No, they're going to have to not even raise it that. They're going to have to even cut it more. So again, downside, we know the story, and I would believe it should be quick and severe. Upside, it'll just be consistent, and it shouldn't battle it as much as we did today and yesterday. It should be more, not like that, but it should be more consistent. Ding, 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 with a good little bounce every now and here and there, and bounce higher. All right, I'm going to end it there. And trade smart, trade using the tools that we have. And I believe there should be some decent trading. Today was not that easy. I will be honest with you. Even with all the downside, it was kind of choppy in the NASDAQ and at times choppy in the S&P, eventually making this move. And if you were there, you saw it and you traded it, you made some money. All right, next update will be on Thursday, the 17th.